Good afternoon, traders. Today is Thursday, December 5th, 2019. Today we're taking a look at lean hogs. We want to take a look at February lean hogs here in a minute, but right now we're looking at the continuous daily chart of lean hogs. You see we've made some really nice cyclical moves here in the hogs, and what I'm watching for now is a potential turning point back to the upside. We know from a seasonal perspective that the meats and hogs and cattle in general typically tend to drift higher into mid to late December due to consumption, and they typically then peak out right towards the end of the month. So right now I'm kind of looking for a short to intermediate term buy on hogs. You can see that we've been testing long-term support here on the daily chart. We've kind of got this sloping angle to the downside, and so we're going to be watching these areas closely. Notice that we've been basing out right around here, which also happens to be into the trend line. We always like to add a couple of additional layers of confluence if we can. So we'll just draw a fib retracement from this high down to this last swing low right here on February 19th of 2019. And you can see that brings us to the 786 retracement right around the 6110 area. That area has paused before, and as you can see here on the chart, we do have some past price structure as well. The market has rejected a couple times. Once it broke the resistance, it zipped higher. It's also acted as support and resistance at other various times in the past. Now, if we look at the February contract, the contract we would be interested in trading, notice that it looks a little spotty because there was no volume at that time. The real volume started to pick up here in March 2019 of this year, so about a year ago from the current contract that we're looking at. So notice we have kind of this basing support right around in here, and we're stabbing down in here multiple times. And so we'll be looking to take low risk entries to the long side. Now, I did mention some seasonal aspects of this trade. You can see right here is December 15th, December 10th, December 15th area. Notice that we have bottoming prices on historical prices on 5, 15, and 30-year averages. Markets to the bottom right there, and then go to the upside actually and carry forward a little bit into January. Got further confirmation by looking at our Smart Futures scanner. You see this is a trade that we pulled up here, getting long or around December 18th, although that is a suggested starting point. It's not an exact starting point, and holding right into the end of the year. 86% win rate over 7 years of data. Average profit has been 41% on margin, or around $540 per contract. You see we had 2 losing years last year, 2018, also in 2016, but it's been pretty steady Eddie ever since. You can see the risk reward tables year by year by clicking there, and we can see that the average daily profit's been about $32. Biggest profit's been about $1,300. Max drawdown's been $1,030, but your average drawdown's only about $400 or so, and that equates to a point. So each point in hogs is $400, so that would be, say, 68 to 69, $400, 69 to 70, another $400, and so forth. So we're looking for low risk entries right around this area. Probably look to start nibbling long above this breakout resistance right here. That's not a trade recommendation. These are just some ideas that we are kicking around inside our membership, and we'll look to be getting long lean hog futures either by buying futures or buying call options. If you're not trading futures, you can look at cow, which is the ETF that tracks livestock. It's not going to be the most liquid market in the world. You can see we have similar analysis here, long-term downtrend line. So the play would be most likely to wait until we peak back up and break that trend line, make sure it holds, and then we'll be looking for targets up here at 49.5, and then potentially even up here to retest these highs at 54. So hope that helps, and we'll see you on the next update.